Good morning. Now, gold. I don't think we can go through without talking about gold. Now, you can see the way it oscillated around last week's pivot. This is different today, but the pivots were 1198, 1197. Those were last week's pivots. And once it broke up above this little bit here, okay, the writing was on the wall for gold, and up we went, and look, we tested that 55-day moving average. I got out of my long gold just before that because of it being such a big level. Now, with gold, you can't afford ever to take your eyeballs off of it. The reason being is that it doesn't move for a long time. Well, when I say a long time, a few days. And then all of a sudden, bang, it goes. And this is what happened on Friday. Went up, hit that level, and came down. Now, what we know about gold is this. It is well supported down at 1192. Unfortunately, what you're seeing there is a gold futures chart, because for some reason the gold cash chart isn't working. But I've got the gold cash chart on other systems that I'm looking at while I'm talking to you. The level that we're watching on the gold is 1192 to 1187. Okay, that's the support zone. You can see that we've come down. If I polish this up, we've come down. This is key, and this is like a rectangular continuation pattern. Now, normally these continuation patterns show that they're going to go in the direction of the trend. Well, we can see that the trend in gold has most definitely been lower. However, look, that bar there, okay, and the subsequent move in gold and this flattening out of gold is a typical gold move. Typical. So unless we do break our key support levels, we're going to keep on buying into dips. Alright? As I've said, 1192 to 1187 is where I personally want to be long of gold on spot. If we start to break down through 1185, we're out of it. The risk reward is negligible on gold, because if you continue to buy dips and stay within this rectangular band, you're going to be all right. We don't want it down here. That's where we do not want gold, because then it's going to go lower by quite a bit. So if we look at where our pivots are, we've got 1199 on the weekly, we've got 1204 on the daily. 1204, as we know, is another level on gold. It really is. So on the top side, we have 1204, 1210, 1215, 1217. Okay? We are only going to be buying gold again if we can break up through key resistance that I know is at 1221 to 24. If we can do that, gold's on a run. Okay? But at this point here, this exhaustion gap here, and that day of closing higher and the subsequent move up, leads me to think that possibly gold is on the up. If we take a quick look at the weekly chart, you can see why I was getting, if not excited about gold, but you know, a little bit excited about gold. Our indicators are quite positive. We're not going to get a lot of movement on the top side unless this crosses the zero line. But look, we've come down quite a way. If I can put a fib on there, so there, and bring it across, okay, you can see why this value area here, this resistance band here was quite, you know, important. Now the weekly chart does show this is where we're exhausted. This little bit here is like a little pennant on the weekly chart. Alright? Now these little pennants after a move higher like this are quite bullish. So please be aware of that gold could break to the top side. Alright? And we should be able to see gold at 12.34, another big level in gold. 12.44, another big resistance level in gold. It just so happens that our Fibonacci's and our moving averages are coming in at the same place. Alright, once that happens, and they do come in at the same place, the market wants to head for it. Alright, so we're buying dips, we're holding them unless we break below 11.85. Good luck, I'll catch you tomorrow.